Hey, so you're thinking about buying a house in California. Now, look, we all know California is an expensive state. Income's higher, education's higher, and housing prices are higher. That's just same thing with Hawaii, Massachusetts, New Jersey, New York, right? So look, you've been sold a bill of goods that the 30-year amortizing loan is the only loan in town, and that's why you've been told that the only lever you can push to control the expense, because there's three things that go into the expense of a loan. How much you're borrowing. So if you're putting 15% down, and I've got a jumbo loan that only requires 10% down that we're going to talk about. But if you put down 10 or 15%, the balance is being financed. So that's a finite amount of number that's a number you need, right? How long you're going to have the money and the interest rate. And since you've been told that the only game in town is really the 30-year loan, that means that the only lever you can really pull to control the cost of your loan is the interest rate. That's why everyone tells you to go beat the crap out of your lender. Go get a better interest rate. Shop around. On a $1.35 million loan, a quarter point difference is only $200 a month before any tax consequences. So that's not really a great lever, but you've been sold that because you don't look for a better loan, and I think I've got a better loan for you. Watch till the end. You tell me if this sounds better to you. Here we go. All right. So let's find out why the banks are so freaked out about this loan, the Home Select from Geneva. First of all, again, you can learn more at gohomeselect.com or reach out to me at 805-231-1644. Let's blast through this. So let's say we're looking at a $1.5 million purchase, 10% down. I don't think you're going to find a 10% jumbo loan. They're pretty rare if it even exists anymore. But let's just assume for hypotheticals that you can find one. We're going to say you're going to get a 6.75 APR on that loan, and that's what we're going to compete my product with. Now keep in mind, I already told you that the banks want you worrying about eighths of a point here and there and beating up your loan officer. I'm going to smoke this by a couple of points, I bet. Let's find out. Ready? Let's wait till the end, and you'll see how well we do. All right? So we're going to assume that somebody buying that type of house maybe has $27,500 a month going through their accounts. That's their, because there's an FDIC assured checking account that's attached to this loan. We are going to assume that after again, the comparison payment would be about $87.56 for a amortizing loan. Another maybe $2,100, $2,200, $2,300 for taxes and insurances. And then you're going to have roughly $16,000 left over, of which we're going to say you're going to probably spend nearly $10,000 on food, entertainment, car, etc. And let's say you're going to save about 25% in the form of savings in your checking or savings account. Again, this is for conservative people who have more money than month. If you're living hand to mouth, this is not the product for you. We have other products. This is for people who qualify for jumbo type financing. 43% DTI, reserves, stock, bonds, gold, 401k, whatever it is, crypto. But you got to have some reserves. You got to have surplus income, discretionary income, and you have to have a DTI, a debt to income ratio of 43% or under. And we're going to tell the algorithm to calculate. There's no salesmanship involved. So in this particular scenario, and again, each person is different, call me. Let's figure out what yours looks like. This person's going to pay off in 11.3 years instead of 30. At the end of that time, now keep in mind they financed a $1.5 million house. In 10 years, it's worth what? Double? So now they have almost a $3 million house, right? Even if it went up by 50%. A $2.2, $2.3 million house now free and clear. They have a $1.35 million line of credit free and clear. They are liquid. This loan creates safety, liquidity, and return. And I'm saving them $1 million in interest expense. $1,041 is what I'm saving them over a 30-year loan. Would you be mad at me? Would you be upset? Would you leave me off the Christmas card list? Probably think you put me on the Christmas card list. And remember I told you that we're saying 675 is the rate? How does a 3.23 sound to you? 3.23 comparison loan effective APR. You can go interest only on this loan. You're having a bad month, Christmas, cash flow gets a little wonky for whatever reason. Maybe one of your houses, if you have rental properties, goes vacant and your cash flow gets hammered. You can go interest only at only $5,600 a month versus your PI payment, principal and interest payment, on a normal loan would be $8,800. For this loan not to work, interest rates would have to go all the way up to 12%. This is absolutely the best loan available for qualified borrowers. I've been doing this a long time. Got my first license in 1997. This is the most powerful loan I've ever seen for qualified borrowers.